What is SMTs? Have you ever seen Nasdaq and S&P act like this fucking toxic couple? One's just pumping and the other one's like, nah, bruh. Nah, I'm not feeling that shit today. That right there, that's smart money divergence. It's basically when the market's two favorite children, ES and NQ, start disagreeing. And it's just like any family argument, when that happens, someone's lying, and that usually means the truth comes out in the form of a massive fucking dump or a pump. Today, I'm going to break down what SMT actually means, how to spot it, and how to use it to catch reversals before everyone else does and knows what's happening. So, first off, SMT stands for Smart Money Tool, or Smart Money Theory, or it really just depends on who you ask. It's a really simple concept. It's when two correlated assets like Nasdaq and S&P 500 start diverging. It's a clue. Now, the reason they move together is because they usually share the same big players like hedge funds, algos, institutions. They're all just trading similar technology and large cap stocks. But sometimes, like shown in the example right here, one takes out a high and the other one doesn't. That is a smart money divergence. Now, what does this mean? This usually means that there is no real buyers behind the move up, which means there's fake buying pressure to fake out the people trading breakouts. But this isn't random, this is market manipulation. One index will take the liquidity above the highs while the other refuses to confirm it. That's just an early sign that the move might be over. Now, you can think of ES and NQ like that one couple on Instagram where they're both posting these cute fucking photos. Markets are trending, everyone's happy, but then one of them suddenly starts posting some cryptic shit like, some people change. Well, that's your fucking divergence. It's literally like the market saying, yeah, we're still together, but one of us is about to break the fuck up. You feel me? If NQ rips the new all-time highs, but ES doesn't follow, that usually means the Nasdaq just grabbed liquidity, sucked in the breakout traders, and is ready to fucking reverse. And it's the same thing if ES breaks the lows, or NQ breaks the lows and ES or NQ refuses. It's the same thing in reverse. It's just a sign that the downside move has been exhausted. Now, this is a super simple concept, so I do feel like you guys should get it just from these examples alone, but I'm going to show you guys an example from yesterday on a trade that I could have taken and a reason I didn't take it. Yeah, this is going to get out of hand. I'll just show you guys. First off, I'm going to show you guys the example. So, in this example, you can see NQ being the weaker asset and ES being the leading asset. Leading asset meaning the pair that doesn't sweep. Why is that? Because it shows strength or weakness in the market. Now, we usually want to trade the leading assets because that's what's going to show us the move the quickest or give us take profit the quickest. So, here you can see NQ takes out the high, ES doesn't, and here you can see that ES takes out the low and NQ doesn't. This is a bullish SMT and this is a bearish SMT. And here we have a little example from yesterday. This is FOMC day. I did say pre-FOMC that I was expecting the FOMC statement to be a scam week. A week up and down, and then we just consolidate until Powell starts speaking. And that we did. And then Powell started speaking around here. I said when Powell goes live, I want to see a chop, and then I want to see a nuke. I want to see him get off stage, and then we nuke fast. But he went on stage, and there was a lot of bearish data to be released, so we ended up nuking right off the bat. Which is a good thing. It followed our bias. But as I was on live, I said I want to see the flip of daily open, and then I want to see shorts. But why did I not take shorts here? Because we flipped through the daily open, right? But on the move down, we took out previous day low on ES. This means our main drawn liquidity has already been taken out. There's no point for me to take this trade now because my drawn liquidity, it's basically like NQ sweeping these lows. There's no point for me to target these anymore because, I mean, yeah, it's already been taken out. The only reason I'd want price to go back down here is so that price can go and rebalance this new week opening gap down here. But I remember as I was live that people were flaming me because I wasn't entering this trade. I said it looks really good, but ES has taken out the low, so there's no point. And it was a good idea because NQ ended up pumping all the way back up to all-time highs in a couple minutes after. And this is just one example. This is me using it as confluence to not enter trades, but you could have also used this bullish SMT as an entry trigger. The reason I didn't do it is because I had a strong bearish bias, but if you did, You could have went for something like this, like the golden pocket here. If you've watched that video, you have a golden pocket entry right here, perfect entry. Or if you've watched the rejection block video, you have a perfect, hello? Oh. You have a perfect 1 hour rejection block that's formed by this SMT right here. Now this was a perfect long setup. I didn't take it because, well, I'm a retard. And I was way too focused on the shorts. But if you took it, good on you. Now this is just one example. I don't really have any more examples. I feel like it's kind of self-explanatory. Yeah. So, for SMTs, how do you spot them? How do you know which one is a valid high or low to take? And all that kinds of good stuff. So, for SMTs, I only use prominent highs. Like swing highs, swing lows, equal lows. 4 hour highs, daily highs, all that kinds of stuff. Data highs works too. But most of the time, it's only on big highs and lows. I don't like to use them on lower time frame because it doesn't really give me good enough confirmation. But yeah, I mark out my equal highs or my equal lows on both ES and NQ. And when one takes one of those highs or lows, I'll wait. If the other fails to take them, that's my divergence confirmation. And then I'll start looking for confluence, like a breaker block, fair value gap, displacement, golden pocket, you name it. And then I'll enter, usually toward the mean or the opposite side liquidity. How to find SMTs. Number 1, only use prominent liquidity pools. What does this mean? Swing highs, swing lows, equal lows, 4 hour highs, like higher time frame swing points, like this. This right here would be a nice SMT high. This right here would be a nice SMT low. This would be a nice SMT low. This one, like you want the high or low to be developed. You want it to be developed on the higher time frames, like here on the hourly time frame. This could have been a nice SMT. This could have been a nice SMT. This previous day low was a nice SMT yesterday. This was the SMT we had. And then the SMT down into the new week opening gap could be a nice one. And yeah, that's basically how I use them. Just use prominent liquidity pools. Number 2, never enter right off a SMT. You need entry confluences. Like if I see NQ taking out this low and I see ES is up here and not taking it, it's not like I'm going to enter directly off that SMT because I don't even know if it is an SMT yet. The only reason I do that, or if I do that, is if, let's say, ES takes out this low the moment we tap into the daily open on NQ. That's a nice entry confluence for me that, okay, the down move might be over now. We can limit enter this and look to aim for the highs. Like, you always have to look for displacement. The best way to confirm SMT would be something like this. Like, you see a sweep this on NQ, not on ES, take it out, and then look for displacement to the upside, like a 5-minute fair value gap or 15-minute fair value gap, and then a retracement back down to it, and then you can enter off this if you see us move up. Or you can use daily opens like I do and use this as confluence. Like if we were to have a nice SMT at this low, I'd look to see a flip back above daily open if we want price to go back up higher. The overall key to SMTs is just patience. Most traders see a breakout and just jumping long or jump in shorts. Meanwhile, the smart money is usually just fucking unloading into their buys. I want to go over some common mistakes too. Common mistakes. Number 1, don't trade SMTs in consolidations. Like this. Like this doesn't tell you anything. If you have a SMT here, I wouldn't really count it. Like this is not a good enough high for me. If we're just chopping, it's chop. That's literally all it is. Wait for a significant high to be put in like this, and then SMT can be formed. As I'm sitting here watching that video, I have to say I'm sorry because I didn't mean like that. Wait, I'll show you. Like if this high here, this is a good SMT, right? But I meant if like we get an SMT like this when we're chopping. I want it to still be a developed high, but just not like a direct SMT like this because that doesn't show me shit. Like I want it to be like here. If this is our range here, then a little sweep here, and then down here, a nice little SMT. This is super valid. Just don't like trade the chop, trade the actual move, trade the volatility, trade the volume. You feel me? Number 2, As I said, it works best on major highs and lows, not random intraday wiggle. I mean, yeah, that's basically all there is to it. It's literally just a entry confluence. It's something to show you where the market really wants to go. If there's real buyers or sellers behind the move. And yeah, if you guys have enjoyed this video, please let me know. Let me know what I can do better in the next videos. I'm still kind of new to all this fucking education making, so I'm trying my best. But if there's anything you guys missed, anything you guys didn't get in this video, please let me know. I'll try my best to do it better next time. And yeah, see you fellas.